Assalamu alaikum wa rahmatullahi wa ta'ala wa barakatuh. Hello everyone. My name is Muhammad Abdullah Bukar and my matrix number is 8231123028. And today, inshallah, I would like to present a very interesting and interactive topic which says cryptocurrency to replace traditional banking system. Yes, I do. I personally do believe that the cryptocurrency is going to replace traditional banking system because cryptocurrency has been vast, has been in rapid movement, whereby each and every country now is using cryptocurrency. So dive in with me to the end of the video, and I would like to share my thoughts on how cryptocurrency is going to replace the traditional banking system. And this is presented for Alia, Madam Alia Farhana. So moving on to the introduction section, we are going to introduce the potential of cryptocurrency to replace traditional banking. The rapid development of financial technology has transformed the way individuals and institutions interact with money. Among these interactions, cryptocurrency has emerged as a powerful alternative to traditional banking. Built on blockchain technology, cryptocurrencies such as Bitcoin and Ethereum offer decentralized digital financial solutions that challenge the monopoly of centralized in financial institutions. This is talking about how cryptocurrency has provided decentralized means of sending money, whereby a person can send $1 million, $2 million, and more than that, a very huge sum of amount of money without the government tracking him or blocking his account or freezing his account. This is a very safe means of sending money, which individuals can gain rapidly. And then moving on to the next one is the introduction to cryptocurrency. What is cryptocurrency itself? Let's dive in. Cryptocurrency is a form of digital or a virtual currency that uses cryptography for secure financial transactions. Unlike fiat currency issued and regulated by government and centralized banks, cryptocurrency operates on decentralized networks based on blockchain technology, a distributed ledger enforced by a network of computers called nodes. The first cryptocurrency, Bitcoin, was introduced in 2009 by Satoshi Nakamoto, and then since then, thousands of cryptocurrencies have emerged, each with unique features, utilities, and blockchain protocol. Up to date, the person that invented the Bitcoin, which is Satoshi Nakamoto, has never revealed himself. I wonder where he is. Moving on to the next is the key features of cryptocurrencies. What are the key features of cryptocurrency? The first one is decentralization, transparency, immutability, and then limited supply. Decentralization. No single authority controls the currency, whereby no government or some kind of institution control. You alone control your wallet. And then we have the transparency. Transactions are recorded on public ledger, whereby everyone can see because it's a very safe means of sending money. And then we have immutability. Once a transaction is recorded, it cannot be altered. It can never be altered. It's one of the best and one of the safest mode of means of sending money. And then we have the limited supply. So introduction to traditional banking system. I've been talking about traditional banking system, traditional banking system. So what is this traditional banking system? Traditional banks are centralized institutions regulated by government and international frameworks. They serve as intermediaries in the financial system, offering services such as deposit, loans, savings, currency exchange, and payment processes. All these that I mentioned, like loans, savings, currency exchange, are all controlled by the government, all controlled by the government, whereby there is no private organization there. The government is controlling each and every movement of the currencies. So the international traditional banking system is centralized. Meanwhile, the cryptocurrency system is decentralized, whereby this one is operated by the government, whereby that one is operated by each individual that possesses the asset. So, while banks have played a crucial role in economic development for centuries, yes, we all agree on that, they are increasingly criticized for the first one is high transaction fee. Banks charge a very high transaction fee. For example, I could remember I'm using Maybank here in Malaysia. Each year, Maybank they charge 12 ringgits, 1 ringgit each month. So to me, it's kind of high. We have slow international transfer compared to the cryptocurrency. The transfer using mobile app is very slow, very slow, and then limited accessibility in rural or underserved region. There are some places whereby there are no networks. You have an urgent issue with money. You want to send money to someone, and you can't due to the presence of there's no service. Excessive regulations and bureaucracy. There are very excessive regulations and then lack of transparency. Yes, indeed, bank lacks transparency. The advantages of cryptocurrency. Sorry. My sincere apologies, please. So as I was saying earlier, let's move on to the next slide, which is the advantages of cryptocurrency over traditional banking. Cryptocurrencies offer several advantages that make them appealing alternatives to traditional banking. The first one is the decentralization and user control. Cryptocurrency eliminates the needs for third party intermediaries. Users have complete control over their funds through their private wallets, reducing the risk of funds being frozen or seized by institutions, as I said earlier. And then the second one is lower transaction costs. Sorry. Cross-border transactions with cryptocurrencies can be completed at a fraction of the cost associated with bank wire or money transfer service, making them especially useful in international commerce and remittance. So here are the challenges and limitations. So despite its potential, cryptocurrency is not without its limitations and risk. These barriers currently prevent it from fully replacing traditional banking, which are price volatility and then security risk. The price volatility consists of cryptocurrencies are notoriously volatile. They are very volatile. Prices can fluctuate dramatically within short periods, making them unreliable for daily transactions or long-term savings. Yes, that's the first disadvantage of the cryptocurrency. They are very volatile. For example, this particular asset is $1. You can see it fluctuating. In the night, it's going around $5, and then tomorrow morning it's going to come back to $0.5. So it's very fluctuating. And then security risks. While blockchain itself is secure, user error, exchange hack, phishing, and lost private keys can result in irreversible losses. So the role of central bank digital currencies. In response to the rise of decentralized cryptocurrencies, many governments are exploring central bank digital currencies, digital form of national currency regulated by central banks. For example, we have the China's digital yuan, we have the Sweden's e-krona, and then we have the Nigeria's e-naira. CBDC, which is the abbreviation for Central Bank Digital Currencies, combine the speed and efficiency of digital assets with the regulation and stability of fiat currencies. While not centralized like cryptocurrencies, they may act as a bridge between traditional banking and digital innovations. I totally agree with this 100%. So, the future. We are now talking about the future integration over replacement. Future of how cryptocurrency is going to replace the traditional banking, how we are going to rely on centralized or on decentralized access instead of centralized, instead of government controlling our D&D activities. While cryptocurrency offers compelling advantages, it is unlikely to completely replace traditional banking in the near future, but it will, even though it's not going to replace it soon, but definitely is going to replace it. Instead, a hybrid financial system may emerge. Banks may adopt a blockchain to enhance efficiency. The future of finance likely lies in integration, not elimination, leveraging the best of both systems for a more inclusive and efficient global economy. So, here is the conclusion and the last part. Cryptocurrency represent a paradigm shift in the way we view and manage money. It challenges the traditional banking model by offering speed, autonomy, and inclusivity. However, due to its volatility, regulatory hurdles, and technological limitations, it cannot yet replace traditional banks on a large scale. But bear with me, is going to represent, it's going to replace, even though it's not soon, but it's going to replace because the world is changing, everything is fast approaching. Nonetheless, with ongoing innovation, increased education, and evolution regulation, cryptocurrency is poised to play a significant role in the future of global finances. That's what I said. It's going to play a significant role in the future of global finances, not as a complete replacement, but as a transformative completion for traditional banking. So that's all from me, and I hope you guys know that cryptocurrency is going to replace the traditional banking system, even though it's not near, but soon enough it's going to represent, due to the fact that the world is changing, technologies are improving, innovations, and many others. Because the cryptocurrencies is more secure than the physical bank itself, whereby banks are hacked. The rate of by which banks are hacked is very, 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 very high. So for me, preferably, I'll use cryptocurrency rather than using the traditional banking system for my day-to-day experiences. So that's all from me, and thank you so much for listening, guys.